Hi, I'm Jamie with The Saving Secret, where I help you become more intentional with your money. If you're new to the channel, please be sure to hit that subscribe button. So today I want to talk about the Roth 401k. So recently, my employer has just offered the Roth 401k as an option to the retirement plan. And on hearing this news, I was very excited and I made the switch that day. I got really excited. I emailed all my friends that worked with me and I said, hey guys, did you know the Roth 401k is available to us? Go ahead. I shouted it. Not really shouted it, but I told a lot of people about it because I thought it was the most amazing news. The company didn't do a very good job of letting people know that this was a huge benefit, but I took it upon myself to tell as many people as I did because I think it's a huge benefit. And I've had several people come up to me asking me, why are you making the switch? And I know now that I have to pay taxes, is it really worth it? And I'm in this tax bracket. What do you think I should do? And why are you making the switch? So I wanted to do this video, not just for you guys, but for a lot of my associates that I work with, because I wanted to give some insights about why I have made the switch to the Roth 401k and why I think it's important for you. So I wanted to outline some of that. So there's a little bit of the backdrop. I did a little research and it says about 60% of companies have Roth as an option. So if you have that option, this is definitely a video that you should consider if you're not already contributing to it. So let me go through a couple of reasons why I believe the Roth 401k is where you should be contributing your money. But before I get into why, let me give you some of the differences. So first of all, with the traditional, the money that you put into your 401k actually goes in tax-free. So for example, if you make $100,000 and you contribute 10%, $10,000 reduces your taxable income. So they only see it as you're making $90,000. So that is a benefit of the traditional. Now, however, the money that you pull out of your 401k at the age of retirement of 59 and a half, or anytime after 59 and a half, the money that you pull out will be taxed at that tax rate of what you're taking the money out. And the minimum tax bracket at this point is 10%. So whether you take out $5, $50, $1,000, basically if you're married it goes up to just under $20,000, you're going to be charged a minimum of 10%. And then obviously with a progressive tax system, it goes up to 12%, and then it continues to go up after that. So that's the traditional. With the Roth, you put money in and you're not getting that benefit of getting a tax break of going in. Your money that goes in is taxed. However, you're getting tax-free growth. This is really powerful because if you understand compound interest and you consistently contribute, what you'll find is that your growth is more than what you originally contributed in the first place. And I actually have a tool, and be sure to stay to the end, where I go over the differences in taxes between traditional and Roth. Be sure to stay to the end. I do have it downloaded in the show notes below that you can download it, but I'll go over that at the end. The second thing is with people who didn't have access to Roth, the only way to get it was with a Roth IRA. And with a Roth IRA, there were very limited income restrictions. So a lot of people weren't able to do the Roth IRA. They had to do something called a backdoor Roth conversion. And so they didn't really have access to that. But with a Roth 401k, there are no income limits prohibiting you from being able to participate. Now the limits are still the same as the maximum that you can contribute to your 401k, whether it's Roth or traditional, is $19,500 for 2020. If you're over the age of 50, you can add an additional $6,000 on top of that. But be aware that your contributions into the Roth, whether or not you use a Roth or you use a traditional, many times your contribution your match done through your employer, that will still go into your traditional Roth. That'll go in your traditional 401k. And what I mean by that is you'll essentially have two accounts where if you're contributing to your Roth, your contributions will go to the Roth and your company matches will go into a traditional. So you're still getting kind of the best of both, but your contributions from your employer will go to that. So there's a little bit of a nuances between the Roth and the traditional. So those are some of the insights that I have for that. So again, I wanted to share with you a tax tool that I built that really shows the scenario between if I was currently doing the traditional and I made the switch to the Roth, how much extra in taxes would I pay today, and how much extra taxes will I pay in the future? So if you click in the description below, I actually have a link to that video. So right now I'm gonna switch over to that. So be sure to click below and find that tool in the show notes. So go ahead and click on that. So once you click on that link, you'll be brought to this screen where you can either download the Excel file or you can open it up with a Google Sheets. So for the purposes of this demonstration, I'll show it in Google Sheets. So go over and you'll see this little video you have here. So let's click over to the Sheets. Once we click over to the Sheets, I'll kind of walk you through the first tab. Really gives you a couple of information about the saving secret, a couple of the tax tools. And then from here, you put in your drop down of your filing status and a little bit pieces of information. So I'll use this example over here, determining your age, what your salary is, what you want to put in there. That's the maximum you're allowed to contribute. And over here, it'll show you kind of the effects that you'll do that and also your future contributions and how that'll affect it. So looking at this current situation of this person, they're making $125,000 a year on salary. They're deciding to contribute to a 401k of $19,500. They want to determine, does it make more sense to go with the Roth or the traditional? So if you scroll over here, there's this little piece that will open up and it'll show you if you go with your traditional, your income tax will be at $80,700. This is again assuming a standard deduction. So you take your standard deduction and then you also take out what you're taking out of your contribution. So that would be your taxable income. And your taxes due are $9,344, making your effective tax rate 11.57. So if you want to know what I mean by effective tax rate, it's basically your taxes due divided by your taxable income. Very simple there. So if you decided to change that from a traditional to a Roth and said, hey, I'm going to move all my money moving forward, let's put it in there, you'll have to pay an additional $4,200, almost $4,300, so $4,290. So with this extra money, you'd say, hey, my effective rate has increased by 2.3%. Does that make sense? Well, again, like I showed you in my video earlier, that this money will then never be taxed again. This money that you're putting in here will never be taxed again. So you say, okay, what is the scenario if I was to continue to do this until I retire? So that's where I come over here and I show you a little bit about the retirement age projection. So the reason I put 60 here is you have access to your retirement accounts at 59 and a half. So assume you retire at 60, you would have access to it. You would have a little over $2.1 million in your retirement account. Now, assuming you put that in a Roth, this is assuming you do the Roth scenario, you'd have, this is actually assuming you do the traditional. So you'd have a little over $2.1 million and say, hey, your yearly income is about $85,000. That's what you want to use in retirement. You'd look at your effective rate and you'd say, oh my gosh,
So I would still owe $6,800, $6,829 every year in taxes. That's assuming I only take 85,000 out. But let's say one year you're like, you know what? I'm retired. I've got 2.1. Let's say one year I take out $150,000 for my first year. You're going to have to pay $19,124, which you look what you were paying before all these years, you'd pay more then. Again, keeping with the 85,000 yearly, it still looks like you would pay more with traditional. So if you click down here, this is basically assuming what your projected taxes would be and then what your Roth taxes have paid. So this Roth taxes paid is all the things that you have paid through that year. And your projected taxes is based off your effective rate. And the effective rate is, like we said before, what are you due divided by your AGI. So that's where you get your effective rate. So in this scenario, you would be paying at least $60,000 more with taxes with traditional. But again, remember this rate can really only go up. Again, you're going to minimum pay at least 10% in taxes during retirement if you went with traditional. Whereas if you went with the Roth, this $2.1 million would be at an effective tax rate of 0. So this tool is very helpful. There may be a scenario where going with the Roth 401k isn't the best scenario, but this tool I've built, please feel free to use it. Again, if you felt this information was helpful or you want to share it with a friend, please do. Please feel free to give this video a thumbs up. Thank you so much for watching and have a great day.